Hey, folks, welcome to InTheMoneyStocks.com's daily analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, everybody, into the action we go today on this Friday, February 11th, 2022. What a day it was, folks. Markets getting clobbered. We were already trading slightly lower on the day around the early afternoon period when news came out that the Russians will likely invade Ukraine. Now, again, if you're someone like me, you take everything with a grain of salt. The markets panicked. They sold off very heavily. I'm sitting here saying, yes, it absolutely could happen. There's probably at least a 50% chance maybe. But again, according to the headline, it seems like it's about a 95% chance, maybe a 98%. The reason why I'm somewhat of a skeptic, I'm still not seeing the benefits for Putin of actually doing it with the cost of a war, a drawn out, street combat type situation, the sanctions, the potential, LIBOR and all these other, major monetary things that could be done to Russia, the potential for disruption in economies that will affect Europe as well. I mean, it's really kind of crazy. But then the other side of me is also saying Friday afternoon, investors panicking, exiting the market. Do we see a snapback on Monday? Is this a sell-off here that allows for potentially smart money to be buying, thinking that there might be a snapback on Monday? Now, we did just get word as soon as the market closed that Biden is going to be talking with Putin tomorrow via, conference call line. Now, again, who knows? I'm not one here to sit here and know exactly what the future holds. You guys did see that I did play ball a little bit by picking up a few trading opportunities today. I added to my PayPal position and I picked up AFRM. Obviously, relatively small positions as you just don't know the outcome. But I will tell you this. Certain stocks continue to be very, very beaten down. If they continue to go lower, let's say we do get war and the stock market is down big on Monday, let's say another 3 or 4%, I will absolutely use it to buy. All right. Now, we did see oil react by popping today on that news. It went up pretty sizably, I think almost 5% to the upside. But again, I'm still a skeptic. I have so many technical levels on oil as resistance up in this range that, I don't know. Something's just not meshing here. All right. And again, I could be totally wrong. And obviously, as I said, there's a 50-50 chance. I'm just not giving it 95 or 98% chance, which is what the market is giving it per today's sell-off. Bottom line is we closed at 440.48. We are now up $1.20 after hours, which, by the way, is not a lot. But again, we were down about 1.85%, 1.9% on the S&P 500. If we flip over to the QQQ, bear with me as I get my chart back in this groove there, the NASDAQ 100 was down over 3%, bouncing about $1 in the after hours here as well. And the Russell, interestingly enough, if we take a look at that, only down on the day, I think it was just a little bit over 1%. We'll get the chart up in just 1 second. But yeah, it certainly wasn't a big drop there. In fact, you can see right there, it is up after hours almost $1, well, about 75 cents. But yeah, down 0.7% or so on the day. All right. So again, wild sell-off, crazy market, seeing so many of these stocks continuing to kind of get hammered to the downside after recent bounces. But again, to me, this is opportunity. And by the way, I didn't even mention the one big thing, but did you guys see gold today? We've talked about a breakout coming. It's been what I've literally staked my career on it, you could say, saying gold would be the best performer when compared to the stock market and Bitcoin this year. And gold broke out today. Now, it's not above the 2075 high from 2020, but that wedge pattern is now above it. Has it confirmed? No, but we will take a look at that in just 1 minute. All right, so let's get into some daily chart action here. Here is your daily chart on the spiders. And again, interestingly enough, we knew that at some point the markets were going to head down. Did I know that today was going to be the day that this news was going to come out? No, but ultimately, the markets had bounced back. We've broken this upward sloping steep incline. It's inevitable that at some point it's going to sell. Today may have been the start of that. We'll see again what happens on Monday, or do we see a snapback somewhat? Even if we get a snapback, I don't view this as a bullish move other than just, potential for getting some shorts on the table if we were to rally high enough, okay? So just keep that in mind. I'm still in the camp that the all-time highs are in at this point. I'm still in the camp that we are ultimately headed much, much lower because the Fed ultimately is going to tighten. But again, a couple things I just want to throw out to you guys. In fact, I just tweeted about them recently. So, number one, I mentioned it to you guys already that, anytime we get news on a Friday afternoon, I always find it a little suspect. Why can't this come out? Why couldn't this come out like tonight when the markets were closed? Why couldn't it have come out yesterday or this morning? I don't know. But again, to come out on a Friday afternoon when the main result is going to send investors into a panic and cause a big sell-off, and again, we're talking small investors here mainly, I do often wonder about the motive there. Not to say, again, it's not legitimate, but it just brings up that little bit of that skeptic in my brain that says, all right, let's see what really happens here. The other thing I would just mention is, thinking, I pride myself on seeing things from all angles. You guys know that. This is why I think I've been so successful about macro calls, about things like gold, about Bitcoin, and the stock market, obviously, many times over. But if you think about it from Vladimir Putin's point of view, right? What does he have? What type of, what kind of repercussions can he push on the West, right? And he's really, in a weird way, he's using this threat of war is actually, and again, this is going on the assumption that he's not going to invade, but if he doesn't invade, this especially this threat, and even if he does, it still applies, but he's kind of using his one weapon against the West, right? I mean, he's not going to bomb Washington, D.C., right? I mean, he's not going to, we're not going to see fighter jets coming over the U.S., right? We know that. But what he is doing is he's causing all this chatter about war, which is then causing oil prices to go up, natural gas prices to go up. I think about 25 or 30% of all wheat comes from Russia and Ukraine. So, wheat prices are surging to the upside. Basically, his weapon is is to push inflation on the West. Prices go up, it goes right through, it's inflationary. And when you say, well, why is that a weapon? Well, basically what my guess is what he's trying to do here is he's, and this is the way, honestly, this is the way most battles are going to be fought in the future. It's going to be cyber attacks as well as economic attacks. And by creating more inflation in the system than otherwise would be, what he's doing is he's going to cause the Fed to have to react harsher, raising interest rates more. We saw the CPI this past, yesterday or the day before, whenever it came out, spooked the markets tremendously. And then higher prices like oil going up today, it basically creates more inflation. The Fed has to react more harshly. And when the Fed reacts more harshly, what's going to happen, right? They're going to push the U.S. economy into recession. So, it's not as simple as like, hey, do I want to invade Ukraine or not? I mean, that to me, that's not the issue here. And I strongly encourage people to think about it more in a cerebral way. It's definitely on the side of okay, well, we obviously know the U.S. has put lots of sanctions on Russia, so I'm sure there's an angle there where he's trying to push things to the limit, then maybe get a bunch of sanctions lifted if he doesn't invade. But then also saying, you know what? If I maybe can't, invade you guys, but I can surely cause you guys to go into recession and cause an economic, issue there. All right. Anyways, enough said there. I thought that was a very interesting kind of thought process that does make a lot of sense if you step back and think about it. All right. In terms of the spiders, we obviously, if we continue down, this level is going to be a big level of support. I'll put the line in right there. Big level right there. Eventually, does it break? Yes, it does, of course, but, you'll get some bounces. And then after that, we'll go back to this area, then this pivot high from pre-COVID, and we'll probably get back in this range until we get more clarity on the stock market, or I should say the economy. Looking at the QQQ real quick here, let's take a look at that as we flip to that chart. And again, the Qs amazingly almost back down to this upsloping trend line again. Now, what's so crazy about the Qs is if this line breaks, this is where you really get into some trouble with the NASDAQ. All right, if this line breaks, folks, You're then in a free fall with really getting outside of any major levels. You will have some stops along the way, but there'll be a minor support just below 320. I think I put these lines on for you guys prior. Major will be at 300. 300 would probably be your next real big buying level for NASDAQ, the NASDAQ long stocks, like the big tech stocks. I still like Facebook, in all fairness, because it's already been clobbered. But like an Apple, not touching it. Now, would I touch it maybe if the Qs dropped to 300? Yeah, at that point I would. That's another $50 almost on the NASDAQ 100. And then eventually, I think, again, you have to assume these markets are going to make their way back to the pre-COVID levels, which on the Qs is a really, really long way away. We're talking 240 or so on the QQQ. All right. If the stock market does take dumps down into these lower levels here, then you better believe that the Fed won't be raising rates more than they already have at that point. My guess at that point, you see unemployment surging to the upside, and they'll have to go back to their kind of printing money, figuring how to basically stimulate the economy mode. Now, what's interesting, if you get the stock market to decline enough, it's very likely you will see just naturally inflation come down. Now, again, I don't believe inflation's going back to 2%. But is it possible that inflation goes back to 4%? Yeah. And I think that's actually what's going to happen. So, think about this. If you have the stock market, look at the Qs. The Qs were above 400. If they go back to 240, you're basically cutting the Qs, not in half, but close, maybe 40% drop in the NASDAQ 100. And you're going to then be in a position where there's huge wealth destruction. Think about pension funds. Think about 401ks. Think about investment accounts. All these people who have just ridden the market long for so long are now watching their portfolios vanish by 40%. All right? That is going to translate into people buying less goods. It's going to force prices down. It's going to solve a lot of the supply issues, the supply chain issues. And you literally could see, again, once oil comes in and natural gas come back in, you could see a nice drop of inflation. Okay? So again, then it comes to, okay, well, if the markets drop that much and that happens, now the Fed can attack unemployment by printing money again. They'll say, oh, well, 4% inflation is doable. So, with 10% unemployment, we'll start printing money. And again, that's where you start thinking about, okay, well, now you go long a lot of the tech stocks again and you start to ride them up. So it's, this is just, unfortunately, longer term, it's a no-win. But for us as traders, it's a win-win-win-win-win jackpot type scenario. All right. Let's go to the Russell. Let's check out the IWM daily chart here. Again, not very big pullback. I don't see any level at this point that I would buy the Russell at in the near term, but I do have a level longer term, and it's very simple here, folks. Right here at 170 with a gap fill right around 168 or 167. This area right here, if we had a dump on the IWM down here, heck yeah. I'm a buyer. I'll buy TNA again, and we'll play it for, the third or fourth time this year or just since late last year again, and we can play it and make some money on it. Absolutely. All right, so good level right on there. Bitcoin, obviously, with tech stocks selling today, and again, I just want everyone to understand, with tech stocks selling, Bitcoin and crypto is going to sell. One day, Bitcoin, I truly believe one day Bitcoin will be more like a gold. It is not there yet. Anytime you have 80% drops from peak to trough in any asset, Bitcoin is what I'm talking about here. And, when it goes into its bear markets, it has a history every 4 years of dropping about 80%. It's always going to be treated as a risk asset. Once it's more adopted and people are holding it more like gold, like everyone has a little bit kind of thing, then yeah, it won't see that. In fact, it probably goes up when people get fearful. But right now, absolutely weakness. Not a huge drop in all fairness, but you are starting to come in. I think, again, what's amazing about the chart of Bitcoin is that the chart tells you everything, right? Again, go back a week ago and I said, okay, upside is to 45 to 46,000 on Bitcoin. It literally went right there. And then I said, okay, now you expect a pullback. Boom. Did I know this news was coming today? Nope. Doesn't matter. You don't have to know what the news is going to be. The charts, in a weird way, predate the news. All right? And I know that sounds so wacky. It's not, I don't really believe that the markets or crypto investors know the news ahead of time. Just for some weird reason, when a chart hits resistance, all of a sudden you see some weird news come out that kind of gives it that nudge back in the direction it should go. It's very, very strange, folks. But it just works like that. I've seen it thousands and thousands of times on charts, and I'm sure we'll continue to see it. The big level on Bitcoin to watch is 41,850. That will be short-term support. If it only pulls back that low, then you actually could see continued upside afterwards, maybe to 50 to 52,000. Again, that is up in the air, though, for me. I'm not sure if that's going to happen. Ultimately, I do see still sub 20,000, even if it goes to 50 first. Okay? Next up, let's take a quick look at the gold chart, and this is just so fun. Love this, folks. Zooming out here on gold. Oh, and of course I typed in the wrong one there. There we go. And look at that, folks. Now, again, you haven't confirmed, so I want to be clear. You know, and the reason I stress confirmation is because if war doesn't happen over the weekend, then you might see gold come back in. I mean, maybe there's a diplomatic resolution, and you could see gold down quite a bit on Monday. But again, once you confirm, then I'm pretty much in the camp that that's a real breakout, not a fake out, and you see more and more upside. Now, I'm riding GDX. You know, we're riding the GLD. Awesome. GDX had a great day today. That's awesome to see. I love, again, the ability to see these bigger moves and then having some of these positions in an alignment for this move to the upside. Okay? Next up, let's take a look at silver here. And silver had a little bit of an up move, but certainly not a breakout on silver. And again, I stress this quite a bit, is that you have to understand the difference between silver and gold. This difference between silver and gold is simply that, you know, gold is a pure safety bet. Silver has an industrial side to it. Silver is used in so many different things, including cars and batteries and all this type of thing. So it's not quite a pure safety play. So it was up, yes, but it didn't break out. Doesn't mean it won't break out, but you have to just understand that difference there. It's one of the reasons why I've been very, very, very bullish on gold since, you know, last year, basically. And I've also been kind of more hesitant on silver, not really picking up the SLV, frankly, because I still don't trust the chart just yet. Okay? Lastly, we got to take a look at oil here, folks, and I want to show you all these levels on oil on WTI that I have, which is why I'm skeptical of this breakout. All right, look at this, pretty crazy. In fact, we don't even need this one. I don't want to confuse you guys, but basically this area here. Now we closed above these lines, right? But again, it's only if we confirm would it matter, right? So we're gonna know on Monday, probably. I mean, again, there's no guarantees that Russia's gonna make their decision by Monday if they're gonna invade or not. But the bottom line to me is that you don't trust a close above until it confirms. I've made that mistake in my early career, and then I taught myself the technique of confirmation. I created it essentially, and it has served me so freaking well. It's incredible. So yes, we closed above, but look, I mean, look at all these levels here. If I zoom out, I think it's just nuts. So you have this shorter term trend line, which is the one that I've been talking about right here, right? Connecting these highs on the daily chart. But then if you go back, and I mean, I'll even have to zoom out. I'll go to the weekly, but look at this trend line here, how pivot high here to this high matches perfectly with that high. Then if we go to the weekly chart, hopefully this enables me to see this. Look, it's pivot low right here, straight across to that same area. And then what's even more nutty is this high to this high to this high. Also, that, I mean, this is like this would be considered a mega level. All right, now granted, we did pull back for a couple days on it, no doubt about that. But I mean, I'd still be somewhat on the surprise side. And again, I think we'll know by Monday what's going on. But to me, I'd be a little surprised if the best oil could do was a pullback from like 93 to 89, which is what it pulled back over the last few days before today's pop. If that's all it could muster off of that many resistance trend lines, then more power to it, I guess. You know, it's just that would be a rare situation. Not unheard of, but very, very rare. And obviously, you know, if you have a war situation, yeah, I mean, that is a rare situation as well. All right, guys. Wow. Tons, crazy, unbelievable market action. But again, we have the charts to guide us. And again, you know, for me, it's just playing it smart. We sold lots of longs in the last week or so as this market was rallying up. Now we're starting to pick up a couple ones. I added to my PayPal, picked up a firm today, which, by the way, we sold a lot higher, picking it up today, amazingly at 48.25. Even closed below that, but that's fine with only a 1% position. But again, I will be on the buying. If we dump out, let's say we're down again 2, 3, 4% Monday, you better believe that I'll be looking for opportunities. I was even scoping out AI again. This one here. This one had a nice little dump today. This is the weekly chart, but let me go back to the daily chart. I like this potential flag pattern. I'd like to get it a little lower, around 24 bucks, but that could be a very interesting one for a breakout of this kind of choppy sideways consolidation. And there's really some of the other ones that we've played too that are coming in very, very hard as well. All right, have a wonderful, wonderful weekend, guys. Be safe, stay healthy. Let's see what this market has for us on Monday. Take care.